Good afternoon, everyone. Happy Tuesday. Hopefully, everybody had a great holiday week, enjoyed your family, and all that, you know, the stuff that's important in life, right? Welcome, everybody. Gabe Velazquez here with you, transparenttrading-solutions.com. Um, let's get right into it. Yes, Katie, I'm glad you're feeling better. Yes, you can catch this later. Okay, so everybody, if you guys have been with me for, gosh, I've been doing these, a couple of months now. Go ahead and pull up your charts. Let's go through some charts together. Let's start off again with some promotional stuff. 5 days free with us every day, going through the charts, getting some setups. If you want to sign up for that, that's again 5 days free in our morning sessions. Go ahead and click the link below if you want to sign up for the newsletter. One of the things that really, if you're, I don't know how many of you guys are getting my newsletter, but I did mention oil a couple of weeks ago. And in fact, that level missed by 2 ticks, the level I put out on the newsletter 2 weeks ago. I don't know if you guys are watching that. The oil has been really volatile. Did come right down to that daily level that I mentioned in the newsletter a couple of weeks ago. We'll talk about that in a second. Also, let's set up, this week, we're closing out the month. We're coming in long another SPY volatility play. We just put on CrowdStrike as an earnings play, expecting that we're going to have a big move in that. Trying to get long oil, trying to get long Canadian dollar. So those are the positions we have working so far. And we'll see how it goes. But tomorrow we've got a big speech by Powell, which is going to be clearly a market moving speech, and we should get lots of volatility, followed by on Friday the non-farm payroll. So those are the two big catalysts this week that could get us out of this range. Now the S&P, since I was with you guys, gosh, it's been a week now because remember we were off for Thanksgiving and Friday, whatever, but really hasn't changed a whole lot. We just came right up to 40.50 on the S&P. If you're looking at your charts right now, we peaked right at 40.50, which is the prior high, and fell right back down to 39.40, and we're rallying again. So all in all, we are essentially in a big trading range. I would call the top end of the range clearly. You can see that on your charts. If you put the S&P up 8-hour chart, you can see the 40.50. It's clear as mud, as they say, right? And then that support area down around 39.40 hit this morning, and we're trying to rally again. So will we get out of this? It's still, I mean, if you think about it, it's a 100-point range, but it's been very, very choppy, very, very challenging to trade. We do have a gap created this Sunday that could be an opportunity for some of you guys. If you look at that chart from Sunday, 40.30-175 is the gap. The gap on the NASDAQ actually worked really nicely. If you did that on, worked for about 3x. So these gaps, in fact, I'm going to do a class for my members coming up this Thursday on gaps, which is, you guys know the gaps are really, really important, and understanding how they work is really really interesting. So I'm going to have a class for that. I'm also going to have a class, by the way, a free class next Tuesday, a week from today, regarding volatility plays, kind of just a primer. I'm not going to get into a ton of detail, but at least give you guys something to. So if you want to sign up for that, I'm going to be putting that out. We're in the process of putting it together, and we should get that together by the end of the day today. Okay. All right. So all in all, averages, big ranges, kind of tentative trading in front of the Fed. The NASDAQ still lagging big time. You guys know what's going on in China. China's affecting a lot of stuff. That's part of the pressure that, Apple's been under. Oil, initially, when we heard of the unrest over the weekend in China, that actually was another mover for oil. And then, OPEC again came to the rescue. And so now oil is, had a nice pop. But all in all, China has been a driver. But now that I think they've calmed things down a little bit over there. Now we got to go back to the Fed, right? And tomorrow's Fed speech and so on and so forth. But on a technical basis, not a lot, changing really since we were together. Looks like the Nasdaq is holding around this 11,490 area, which is like where it broke out from. But again, lots of choppy trading back and forth. I do believe that maybe by the end of this week, with the non-farm payrolls and the Fed tomorrow with Powell, we eventually will get out of this. Whether it's to the downside or to the upside, it's still obviously for grabs. The bears will give you every argument why the market's going to keep going down. We've got still high inflation. We got the Fed still on the war path, and so on and so forth. So we shall see. Now, one of the things that I've been talking about and I've been writing about is this VIX at 20, right? Remember, I talked to you guys about this the other day. And once we get the VIX at 20 or lower, then, you start getting defensive. You start, if you're long a bunch of stocks, you start buying some protection, some long-term puts. You start selling calls against your current holdings and so on and so forth. And I am going to start to get more aggressive on the short side of this market once we start breaking 20 on the VIX. So keep that also in the back of your. So the way it's setting up right now for this next month, we've got another, aside from this week, we've got CPI, we got the final Fed meeting of the year. So it's going to be a fascinating December on one side, but I think it's going to be exciting because if we understand how to play volatility and we love volatility, which we do, then that is a way to it looks like CrowdStrike. Wow, CrowdStrike is down almost. Yeah, this is going to be great for us. Yeah, CrowdStrike's down at 117. We got the 135 puts. So that's going to be great. So that's a great example, by the way, of the stuff that we're doing at TTS, right? So coming in, we'll see if it holds, but 119, 118, that thing's getting crushed right now, which is going to be great for our put position coming into CrowdStrike in front of those earnings. So we'll see. Keep our fingers crossed, right? On that. But that's the beauty of what we're doing is it's a market neutral strategy. Again, the premise is it doesn't, we don't care if it rallies 40 points, great. If it drops 20 points, great. That's the really nice thing about it. So it looks like looking at that right now, it looks like that stock is just getting demolished, but it's a good thing. I mean, not for shareholders if you're long, but that's again. So, anyways, let's see. Are there any members in here that are in that trade? Is Terry in here? Let's see. Can you guys type in the chat? Yeah, yeah, right, Terry. Yeah. So that thing. I mean, let's see if it holds. But that's going to be that's going to be great. Yep. Man, that thing's oh man, 113, Terry. You see, are you watching that? 113 is where that thing is trading right now. Unbelievable. Wow. Anyways, okay. All right, let's moving right along. Yep. Okay. All right. So now so we know that the averages are kind of just mixed and waiting for similarly bonds, right? I've been talking about the bond market, looking at the 10-year, not going to spend a lot of time here because you can see in the charts, right? If you're looking at the charts, you can see again, similarly, lots of range trading. So if I've been talking about this, last time I was with you, I talked about the dollar, stocks and bonds all correlated, right? And if you look at the charts, you can clearly see what's going on. Similarly, bonds and stocks kind of mirroring each other, the dollar also mirroring each other. And so there's really not a lot, this is one thing that as a trader, you have to understand as a trader what corollaries affect what markets. And one of the things that we talk about is a term that we use called triage. In other words, if you're going to trade any long currencies, uh, pretty much if the dollar has a huge drop, most all currencies are going to go up. So in essence, if you are long, let's say Canada or euro or any of the currencies on the futures markets because they're pegged against the dollar, and the dollar, the dollar rallies, well, you literally are long three positions that are going to go against you if the dollar rallies hard. So if you don't understand that kind of premise of the corollaries, and also right now, I've been talking to members as well, is literally put the chart of the S&P and the dollar, and anytime the dollar, anytime the S&P drops, what happens to the dollar? The dollar rallies, and vice versa. And so, if you understand those correlations, you're going to be much better positioned and gain an edge in your trading. So these are things that you have to understand as a trader that gives you an edge. And if you don't understand that, you're trading out there blindly, you don't understand these correlations, well, it's not going to be a good thing, and you're probably going to struggle. Okay. So with that in mind, you look at the bonds, you can see the range trading as well, on the 10-year, which is really the key. 114 is still the level. We've had rollover on that. We're trading in the H contract, which is the March. So that's at 114. That's really the key level to get through if this is going to keep going. And then if we drop below 112 on the 10-year, then obviously that's also going to be that's going to be again a bad sign for the Nasdaq as well. Okay. All right. Now on the dollar, dollar seems to be now putting in a range, and it is characteristic of the dollar. So it looks like 105.35 to 108 seems to be the new range. So if you pull up your chart, you can clearly see the we came down last week, and then as the market rallied, as the market dropped off, I should say that the dollar rallied back up to that distribution at 108, and then we just came off that this Monday, yesterday, as stocks again fell back down off that peak there as well. So you can see the correlation there, which is really important. Now that now positions all of the currencies to go lower. So if you go through all your various currencies, dollar, euro, pound, Kiwi, Swiss franc, you can clearly see that's also coming down to some degree or another. Now we're trying to get long Canadian, so that's getting close around the 73 area. You'll see a level down in there. Still an aggressive trade. We're going to size it up really small. So if you're looking for that, you can look at your charts on that. Metals also highly correlated, and just all told, you can see silver and copper and gold just chopping around, not doing a whole lot because of the dollar. The dollar kind of also doing the same thing. We had this huge rally in the metals as a result of the dollar falling off. We've been talking about the dollar peaking, and so that's really where we're at on this. So there's really not much to do in regards to the metals. I think we're going to probably need to break gold, silver below 20.5, and gold below, I would say 1720 or so. Okay, on gold. So that's really all there is on that. And then also copper. I mentioned copper. Copper could be coming into some buy areas down around the 350 area as well on copper. So we'll have to see how that goes. Okay. And then on platinum, it's just really tight ranged. Okay, let's spend a little time. Everybody, pull up your CL, right? Oil. So I'm actually, I'll tweet this out later. If you looked at the level that I tweeted, that I actually wrote about in the newsletter, was right at the 73.58, I believe it was, right? And we made a low of 60 yesterday, right? When the China thing broke and all that. And now we've had a big rally up into the 80s, and I think 82 is going to be the next level in oil. But all in all, again, it's going to be predicated on what happens in China, and we have an OPEC meeting this weekend, so we can still expect a huge amount of volatility in these energy markets. Now, one aspect to this is, quality levels. If you've been attempting to trade oil, yes, you're having these massive swings, but I have to tell you, I mean, if you go through your charts and you're trading distribution accumulation, order flow, that the strategy that we use at TTS, unless you're actually finding some quality levels, it's been a struggle to trade that, even with these moves. In fact, that was one of the better levels that I spotted on the daily chart. You can see it's we call a rally-based rally on a daily chart. But again, tactically, you had to hit it right on the button, or else you missed it. And sometimes some of these levels that we miss by a tick or two, it doesn't matter, it doesn't count, right? So it's almost like in sports. I've been watching a lot of sports lately, with the World Cup and football and college football. Last Saturday, Ohio State, Michigan. That was but one of the things you notice is, you talk about these teams that hang in there with the better teams, but that doesn't count at all, right? It doesn't count at all. It's like it's the end result that counts. Nobody's going to say, well, the Ohio did great in the first half. Ohio State did great in the first half, but guess what? It doesn't matter. At the end of the day, they got crushed in the second half. So that's all that matters at the end. So my point to you as a trader, it's the same thing. Tactically, you got to be able to execute on this stuff and know your strategies, and apply them in various situations. A great situation would be this CrowdStrike as well. That's a situation that a lot of people aren't really attuned to, which is something that if you want to learn about that, I'm going to do that class next Tuesday on that. Okay. All right. All right. Let's see. Nat gas also been extremely volatile. I've been talking about this. We had rollover on that. And if you're trading the various types of contracts, I think on $8 really is what I'm looking at, a possible short near the actually 760 area, and then all the way back down. I'm still, we also missed this. We got a good pop initially when we came down to 5. We actually did buy UNG and had a nice profit on that. And then we were trying to buy a deeper pullback on the next run, and it just could not get in there at 19 on UNG. And now on the futures side, we're trying to, we'll see if we can get short up here somewhere around the 770s, $8 area, something right in here as well on nat gas. Still, overall, I still think, nat gas is bullish, but it's extremely volatile. We're not doing options on that because the implied volatility is really high on those. So UNG, or there's a quarter size futures contract that you guys can participate with on that as well. Okay. Lastly, let's finish up with the grains. Not a lot going on there. They are poised. Here's the thing with grains. If you look at soybeans around 1460, you look at wheat around the 1740 area, and then all this stuff here is it's been very, very choppy, very range bound. However, what happens is when you get a situation where there's a lot of congestion, a lot of consolidation for an extended period of time, which is what's been going on in the grain markets. Typically, what that portends is that that is setting up for a really huge move coming up soon, right? And so, I had that discussion with my members this morning. Where I think, even though there's not a lot to do presently in the grain markets, we can be poised and ready to go for when these things finally break out, because I think that is coming. Just like we were talking about copper, that did the same thing. Copper was in a range for about 2 months, and then it had that huge rally. Now it's back to the chop again. So when you get the situation where you get these markets kind of consolidating for a very extended period of time, a month or two, that is usually that never persists for any extended period of time. So what's going to happen is these things to me look like they're poised to make a big move. What's going to cause it? You never know. But that's where I would be. That's where we're kind of looking at on the grain markets as well. Okay. Do you guys have any questions, comments before I get out of here? Any markets you want me to review for you? Okay. If not, I'm going to get out of here. So again, everybody, tomorrow, 10:30 Pacific, Powell. I think it's going to be a huge market mover. The setup is actually not bad because it's been consolidating, and I think the expectation built into the markets right now is uber hawkishness. Anything less than that could spark a really strong rally. If there's any hint that they're basically at the at the terminal rate or getting close to at least easing up. But if he comes out swinging and says, we're nowhere near, we still have, blah, 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 then that could be, because I think the last rally here was predicated on, even though everybody knows that they're still very, very hawkish and they're still tightening. It was predicated on the fact that maybe they were in the 8th or 9th inning of the tightening cycle. But if there's any hint of that tomorrow, if Powell basically dispels that, then that could be a cause for a big drop. And the fact that the VIX is still sitting pretty low in that 20 is also maybe leaning more towards a maybe a drop. So we'll see. But either way, we're positioned either side, market neutral. So either way that happens, as long as we get a big move between now and Friday, we're going to do well with our positioning right now. Okay. And then also Friday morning, you got non-farm payroll. So you know how that's going to go. So all set for that. And then going into December, again, real exciting stuff. We've got more catalysts. I think volatility is going to really pick up. And so I'm really excited about December. Again, applying the right strategies and so forth is really important, because if volatility can be your friend or your foe, depending on your knowledge base and execution and strategy. Okay. All right, everybody, have a great rest of your week. And I'll see you guys on Friday. Take care.